It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we cover the latest property news every morning on iHeartRadio, Spotify and Apple. And it's another weekend, and whilst it feels like we haven't really been back that long after our holiday break, the real estate industry has been flat out over the last couple of weeks. So it might be a really busy real estate weekend for many around the country today. Not as sleepy as you might think. People have got properties to buy for the start of the year. So it's go, go, go. And today is January the 20th, and coming up this morning, we are talking for the very first time in 2024 mortgages. And wasn't that a big feature for last year? Looking at all of the ins and the outs of our mortgage property landscape, which was fair to say ever evolving and changing. It really did feel that month on month something was happening, something was moving. The goalposts were certainly moving. And Anthony Landahl, the Managing Director of Equilibria Finance, is back for your 2024. And good morning, Anthony. Welcome back to the Real Estate Breakfast. First off, perhaps tell us all about your break and what you got up to.
Yeah, good morning, Craig. Great to be back, mate. Had a very good break. It's probably the one time a year where the phone does stop. Went down to a little place in the Victorian High Country, sat on a creek for 2 or 3 weeks and enjoyed just reading, watching the world go by, getting wet in the river, doing some running. So very nice time of the year to have off. As you said, the market's back up and running. A lot of agents have come back early this year. So we're back into the thick of it now again.
Yeah, well, here we are on the 20th day for Jan. I mean, we're ripping through the month, aren't we?
Yeah, we're well into the month. There's a bit of activity that's started, and I think we'll see, most people now are finishing up their holidays. A lot of people back at work after that Australia Day weekend, which is coming up. It's back on for another year in 2024.
Yeah, well, I'm looking forward to, of course, resuming some of our normal interviews. One of the interesting things has been the summer series, which is continuing. And this is where we look back. You forget, don't you? It's easy to forget, but the summer series has really highlighted some of the things that were happening back at the start of last year.
Yeah, I think if we look at where we were at the beginning of 2023, I don't think anyone forecast the property market to do what it did. I mean, we knew interest rates were going up. I don't think anyone forecast all that V-shaped recovery that we've in fact had, where the market's now above those record levels that we saw through COVID. So it is always good to reflect. It sometimes creates a foundation for the following year.
Indeed. All right, so we will come back in just a moment and we will talk more mortgage talk, including investors. Is that you for 2024? We will do that next.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
Well, here's something interesting. The International Monetary Fund has delivered a mostly positive annual assessment of Australia's economy, but the IMF has warned of a potential per capita recession for almost 2 years. They say despite forecasting slower economic growth at 1.4%, they have suggested further monetary tightening might be required for the Reserve Bank's inflation target. With an expected negative savings rate of minus 5.1% in 2024, the IMF called for fiscal restraint. And how many times have we heard that expression, fiscal restraint, as well as comprehensive tax reforms, they say, to address disinflation. and they've emphasised the need to manage soaring home prices, which are forecasted to rise over 5% annually over the next 5 years. So that is very much a mixed report card from the International Monetary Fund. And just a reminder, if you've got a question or suggestion, you can email us. Our email address is myrealestatepodcast@gmail.com. We'd love to hear from you.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
Well, there's no doubt that the last 12 months saw a bit of a drop-off in investor behaviour and activity, with some investors selling off and a few starting to trickle back into the market near the end of last year. We are back this morning with our regular contributor Anthony Landahl from Equilibria Finance to look at why the property markets could be lining up in 2024 for investors to come back into the market. So, Anthony, before we look ahead to the investors potentially coming back to the market, firstly, let's provide for the listeners some context as to what happened to the investors last year.
Yeah, it's an interesting space, the investors. In 2023, Craig, we saw new investor credit flows drop around 30% from about $11 billion to about $7.5 billion. So while they trickled into the market later in the year, growing a little bit, some 2% from March 23, we really did see a drop-off for investors as they were very cautious, mainly due to the cost of getting into the market. Obviously, with the rate increases, there was low investment grade stock, so there wasn't much stock out there. And there were also high construction and labour shortages impacting new investors. For existing investors, there was a lot of challenges holding property. As you mentioned, investors were selling up. In one time in Victoria, about 60% of the clearances were for investor properties. So it was a tough time for investors last year. There was some political uncertainty. There was some tax changes impacting investors. So a really challenging time in 23.
Yes, no doubt about it. Last year was an incredibly challenging year, and some commentators, I note, already are raising a number of potential things that could happen for this year. And it's always a really interesting start to each year because there are so many of what-ifs in terms of what could happen. What are the caveats, of course, for 2024? So what do you think could be some of the main factors which could impact the housing market in this year?
Yeah, really good question. And as you say, January, there's always everyone out there forecasting. And I think some people have probably already shifted their view given some recent inflationary data. But look, I think one of the main factors is going to continue to be the rate hiking cycle. We've seen some positive news recently with the inflation data, as I just mentioned. We've also ended with a multi-speed market. In 2023, we've seen some strong growth in Perth, Adelaide, Brisbane, whereas Sydney and Melbourne markets were lagging a little bit. So I think the main factors that are going to influence the market in 24, and I think most of us agree we're coming into it with an uncertain outlook, is the rate hiking cycle, the inflationary and cost of living pressures, migratory levels, whether they start easing up a little bit, and the general economic conditions. Are we going to see that slow down, or are we actually going to see the economy remain pretty resilient with the labour market and those sort of things? So a lot of it's just going to come down to the employment market, migration, inflation, and the rate hiking cycle, whether we're at the end of it and whether we actually see some easing in rates later in the year.
Yeah, the migration is going to be such a big one. It's going to put pressure. It's going to be very tight, I think, in terms of the listings this year as a result of that. But one thing was for sure last year was the sentiment for the property market, which was absolutely all over the place. And the investors were quite volatile when it came to feeling optimistic. What do you think think might be reasons for investors, particularly Q1, Q2 of this year, to feel a little bit more optimistic?
Yeah, look, I think investors generally will be reasonably cautious, but I think there is a little bit of room for optimism, and that might flow through more into Q3 and Q4. But I think the main thing is with the rate stabilisation, we're seeing investors now, particularly existing investors, understanding their cash flow modelling. A lot of existing investors have created some equity with that supply and demand mismatch keeping on driving up house prices. Rates are either at peak or nearing peak. So investors are understanding their cash flow modelling, understanding the cost of getting into their property. Prices, rents are remaining strong. And I think with this sort of two-speed market in the regional areas and in the capital cities, some areas may have been a little bit overvalued, have come off a little bit. I think we're going to see some opportunities for the investor finding the right property in the right area that may have an opportunity now to capture some capital growth. Ultimately, the investors largely operate on capturing capital growth. So now they can go back and understand their cash flow again. I think there are going to be some opportunities with asset values continuing to increase, rates stabilising for the investor. It might be the existing investor, the more savvy investor, that finds those opportunities, with first-time investors probably staying a little bit cautious.
Yeah, and talking about those first-time investors, first home buyers, of course, they have made up a huge part of your business. And those first-time investors, now we talked a lot about those investors last year. What are some of the key things that they should be thinking about for planning and concentrating for the start of this year?
Yeah, it's really relevant, Craig, because some home buyers are going, look, we're priced out of the market, and are actually approaching us talking about, hey, we want to get into the property market. We're thinking of buying an investment property. And we're really clear that it's a much different approach. It's a process. It takes time. You've really got to understand what you're wanting to achieve. Is it capital growth? Is it rental income? You really need to understand your cash flow. Are you cash flow positive? What are the costs to hold the property going to be? Can you, in fact, afford those property? And it's really understanding not every property makes a good investment. You've got to look at your regions, do your research. What's the history on capital growth? What's the history on tenancy rates? What's the infrastructure? Is it reliant on one industry? So investment is a lot different. Do your homework, take your time, understand your cash flow is absolutely critical. And as I said, some of these first-time investors were home buyers now going, hey, we can't get into the market as a home buyer. Let's try and get in there as an investor.
Well, there he is, Anthony Landahl. He has started off the year the way that he wants to continue, talking so much common sense.
Thanks, mate. I'll take that rap for the first one in 24.
Well, nice to have you back on. Enjoy your weekend. And yes, that's the first one done and dusted. Look forward to talking in a couple of weeks' time. Enjoy the surfboard.
Thanks, Craig, and look forward to being part of it all again this year.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
And it's never an easy time trying to read the market from one quarter to the next. Could you maybe provide a little bit of a breakdown of the ongoing recovery in terms of the growth observed and the current trajectory in the recent quarter?
Yeah, so the price growth has seen now 7 straight months in Sydney where we're seeing price growth, and it clearly shows that we're on the other side of the recovery and it's now going into a fast rise. There has been some big gains in the month of June and July. So for context, CoreLogic's index reported that in June prices rose 1.7% and in July 0.9%.
We connect you to the best real estate information across Australia. The Real Estate Podcast.